Good morning, students. I hope you all are doing well. And I am C. Ankit Sharma, your income tax faculty for next two sessions. Fine. So today we will be discussing the provision regarding computation of total income and tax. So technically we can say that this is our last numerical topic. It's chapter 8. But let me tell you one thing. This is going to be the first question. This is going to be your first question in your examination. So this is your last chapter technically, but this is going to be asked in your examination as your first question, and that is also compulsory question. So this is very, very, very important topic, what we are going to discuss today. And one more thing, the compulsory question generally asked, which summarize the all provisions of income tax, majority of it, like 5 heads of income, there must be some deduction under section 80C to 80U and calculation of tax liability. So generally, your compulsory question will be going to ask you that compute the gross total income, then total income after applying the provision of set off, clubbing and deductions. And then they will ask you to calculate tax also. So technically, this question will summarize all the chapters, all the provisions in one question. That's why it's compulsory question and having almost 15, 16 marks of question. And because this question comprise a lot of provision, that is the problem of income tax law, that if you are studying any chapter, it might be correlated with the other provisions also. And because we are talking about the calculation of income and tax, so this is going to comprise, this is going to include, this is going to connect it with a lot of provisions which you have already read and discussed in your study and your lectures, etc. So while solving this question, we have to understand one thing, that we have already revised all the provisions, all the chapters. Only after that, we are able to solve this question. So I'm not making you afraid of this question. I'm just trying to tell you that what exactly we are going to discuss. And that's why this chapter comes at the last, after discussing all the provisions of income tax. So before starting, let's have a good morning. A lot of students already sent me the good morning. Okay, so I am back. Komal, good morning. Okay, nice to see you all again. Kiran Shukla, good morning. Diksha, good morning. Darshan, very good morning. Darshan is asking, how are you, sir? I am absolutely fine, and I hope you all are doing good. Studying very hard to become a chartered accountant. Okay? Okay, Aisha, good morning. Bhumika, good morning. Singh Rajiv Kumar, good morning. Kriti, good morning. Sankaran, Manisha, Harish, good morning. A very, very good morning to all of you again. Good morning, Namaskar, Sat Sri Akal, Vadakkam, Suprabhat to everyone. So, we just discussed that what we are going to discuss in today in the next session. So, this chapter is the last chapter, as I told you, but this is going to be the first question in your examination is going to be framed out of this chapter. In this chapter, almost all the provision you have already discussed, you have already read in your past classes is there, and two new topics we are going to discuss in this chapter again. And that is, one is AMT, that's alternate minimum tax, and one is section 115 BAC. We are going to discuss section 115 BAC in detail, and we are going to discuss a new topic, that is AMT. And after that, we are going to calculate the tax liability concept also. So let's get started. And as usual, you all know me. There are some rules, guidelines. Those students already have taken my session, already knew this, that notes are based on study material issued by ICAI. I have already uploaded the notes yesterday on the portal. provisions are, of course, for assessment year 23-24. You can ask me your query, and after 30-40 minutes of a lecture, we will going to discuss those queries. Focus during lecture, that's the most important part during lecture and in your life also. You should have your focus on the goal. And please ask queries related to the topic. You can ask me query, what we are going to discuss in this session. So kindly do not ask about salary topic or any provision regarding PGBP, capital gain, etc. So we have not that much time because we have to discuss these topic AMT and section 115 BAC, and I am going to solve 11 test your knowledge questions also. The huge questions. Let me tell you very interesting thing about this topic, that very few students are able to solve this question in examination completely right. If it's a 15 or 16 marks question, which is compulsory, question number 1, and it is in examination, then I personally believe very few are able to solve it completely correct. Those are going to get 16 out of 16. Very few. Because it's not difficult. I'm not saying it's difficult, that's why it's happening, because it comprises, it consists, it's connected with a lot of provision of the income tax together. So we might skip 1 or 2 provision, we might going to solve 1 or 2 provision wrongly. It might be happen. A majority of students not able to get full marks in this question, but a very interesting thing is over here also, that majority can solve almost 70 to 75% of this question correctly. So very few are able to solve 100% correct, but majority can actually gain almost 70 to 75% marks in this question easily. So if we are talking about 70 or 75% marks, so we are talking about 10 or 12 or 13 or 14 marks out of 16. So that's a very good number. So if you are able to gain 70 or 75% marks in question, that is a very, very good number. In comparison to that, that's the first question, which is a compulsory question. How you will be able to get this marks? First of all, you have to read all the provision, and you must have the practice to solve this kind of question. You cannot solve this question if you are able to solve all heads of income question individually. If you can solve the deduction question, if you able to solve the residential question, no. You have to practice this kind of question. Those comprises all the provisions together. If you want practice this kind of question, so I personally believe that is not going to easy for you to solve this question in examination, because very few things, very, very small things are there, which we might skip if we are not going to practice these kind of questions. So that's why we are going to solve all 11 test your knowledge question in this session also. So that will help you to understand that what mistake you can do in examination if you are not going to solve these questions in practice. So it's my advice to you that please be focused during the session, and you should revise the provisions also. And after solving these 11 questions of test your knowledge part, I personally believe you should also practice some of last attempts question of this kind also. Like last 4 or 5 attempts question, you should try also. And I assure you, if you are going to solve these 11 questions and going to practice it again and again, and last 4 or 5 attempts question regarding this topic, so there will be 2 benefits. One, you are able to understand in the examination that how this question need to be solved. And second, you are almost going to revise all the provision of income tax without even revising those chapters separately. So we are going to revise a lot of provision when we are going to solve these 11 questions. So that is a kind of a revision also, which we are going to have in solving these 11 questions. So let's discuss about these questions. Okay, please try to take live lectures, as I always says to you. Kindly download notes before lecture for better understanding. There will be no MCQ test in this sessions because we are going to discuss all 11 provisions, all 11 questions of test your knowledge. Fine. And if you want to ask any query in Hindi, you can ask your query in Hindi. I'm going to answer those query in Hindi, and all the other answer will be in English only. Fine. So that's our quotation for that day. And it's a very, very beautiful, very wonderful quotations. We do not need to tell everyone about our struggle. The CA prefix says everything. So how beautiful it is, how true it is. And when we are doing CA or we have completed our course, so we do not need to tell anyone how difficult it is, how was my struggle, what I am going through during this course. Because if you are a CA, people understand. Everyone else understand that you might have been gone from a lot of trouble, a lot of struggle, a lot of things you have fought, and then you are a chartered accountant. So if even you are doing CA, if you are going to tell somebody is going to ask your relative, your father, your parents, friends, etc. Somebody going to ask you what you are doing, and if you are even saying I am doing CA course, so you got a kind of recognition in their eyes. You got a kind of respect in their eyes that even you are trying to do that course. Why? Because they know this is difficult, and whatever is difficult in your life is important. I told you in that session, whatever is easy have no value, and whatever is difficult in your life, that is going to be that important. So we do not need to tell anyone that what we have gone through doing this course, because if we are using this prefix CA, if we are a chartered accountant, everybody knows what we have gone through. There's a new series I watched, that Half CA. I believe some of you might be seen that series, that Half CA. And there is a dialogue in that series. It says, हमारा कोई राजेंद्र नगर और कोटा नहीं होता, हम जहां भी अपनी बुक्स उठा लेते वही हमारा राजेंद्र नगर और कोटा होता. So that is the kind of value we have in the eye of society. If we are a CA, that means what we have gone through, we do not need to tell anyone. Right? So that was the thought for the day. And now moves on to the chapter. What we are going to discuss today. So this is chapter 8. And it has also come with a quotation that failure means SIP. Systematic investment plan, no, it's success in progress. Like work in progress, that means before finished goods, there have to be some work in progress. If there's something is manufacturing, so there might be a raw material, there will be a work in progress, and there will be a finished goods. So if there is failure, that means you are success in progress. So you are on the right path. Failure teaches you a lot of things. So if you win, you celebrate. If you lose, you learn. That learning, nobody else can give you. So if you are having some kind of failure in examination, do not lose your hope. You will be in a right process, because that is a SI. So now the chapter, what we are going to discuss, that is computation of total income and tax payable. That is chapter number 8. We need to find out, in this solving this process, we have to find out the GTI. We all know that is gross total income. Then we have to calculate deductions under section 80C to 80U. After deducting deduction and applying the set of provision and clubbing provision on GTI, we will have our total income. That is taxable income. That is income chargeable to tax. And in that income, we have to calculate tax as per normal provisions, tax as per 115 BAC, which is applicable on individual HUF, and AMT tax. So these two topics are new. That is section 115 BAC. You might have heard about this word, but we are going to discuss the provision of section 115 BAC in detail in this chapter only. And there is a topic of AMT, that is alternate minimum tax. What is AMT? Why is AMT? How is AMT? How we need to solve the question, we are going to discuss today. So in this chapter, the GTI, which comes from the 5 heads of income, then the deduction process, then the total income, and tax as per normal provision. So till here, like GTI, deduction, total income, and tax as per normal provision. like slab rate, etc. These are the concepts you have already gone through till now. So there is two new concept, tax as per section 15 BAC and AMT tax. What we are going to discuss in this chapter. Clear? So you can see the picture is already saying, oh my God, this is so messed. Do not worry. I always told you, enjoy the studies. You have to enjoy the study. That's the only way you'll able to understand the things very easily. So create your interest in your studies, enjoy the studies. Today you are going to learn something new. And let me tell you, a lot of people do not know how to calculate tax correctly. There might be consultant, but they do not know how to calculate tax correctly. I'm not saying that they are not intelligent enough. I'm saying because the software does those things nowadays. So we do not know technically, practically how to calculate tax. But because you are not allowed to use any kind of software in your examination to calculate tax. So we have to know the process. So today we will understand how that process of software work to calculate tax on individual, etc., or on the income of any person. I hope it's clear what we discussed. So again, some more good morning already are here. Harish after. Good morning. Sushil Kumar Barik. Good morning. Sankaran. Sir, your notes is yet to be uploaded. Will wait till end of the day. Sankaran, I have already uploaded the notes yesterday, I guess evening. You can check out on the portal. It is there. It is there. You can check it out. Okay. Nagma, good morning. So good morning, Nagma. So let's start the notes. Let me tell you, in this chapter, there are some basic concepts what we have already discussed or gone through till now. Like chapter overview says computation of total income. It says the steps we need to take to calculate the total income. First of all, we need to determine the residential status of that person. So in chapter number 2, you have already gone through this provision. So we are not going to discuss it again, of course. Then classification of income under 5 heads. There are 5 heads of income like salary, income from house property, profit and gain from business or profession, capital gain and income from other sources. And they all have their separate charging section. So let's see how many of you are able to send me the charging section of all these heads. So send me the charging section in this order. First of all, salary, then income from house property. Do not write the heads of income, just send me the charging section. So the salary charging section, then in the order, it should be income from house property, then PGBP, then capital gain, and then income from other source. So I'm waiting. Let me see how many of you are really sincere.
Recording in progress.
Manish ji, ho gaya clear? Okay. So there was a technical glitch, I believe, students. So now I guess it's everything is fine again. Okay, so answers. You have given me the answer. Let me connect to the portal first. Okay. So Darshan has sent me the answer initially. That is section 15 is for salary, correct? Section 22 is for income from house property. Well done. Section 28 is for profit and gains from business or profession. Capital gain, section 45. And income from other source, section 56. Correct, Darshan. High five from Wi-Fi. Manisha sent section 17, 22, 28. Salary charging section is wrong, Manisha. It's 15. Okay, Varsha has sent me again the correct answers of all 5 heads. Well done. Aisha has sent section 15, 24, 27. Sorry, Darshan has sent me the, okay, fine. Section 27 has wrong, Aisha. PGVP charging section is 28. And then 45 is capital gain, of course. And other sources, section 56. Then Sushil has sent 16, wrong, Sushil. 24 also wrong, 44 also wrong. What are you sending, Sushil? All are wrong. Please, please, please get up, get up, get up. If you are sleeping right now, please get up. Okay. Darshan, okay, fine, clear. Charging section today morning only. Darshan, well done. Mr. Galti Anil, 15, 22, 28, 45, 56. Well done. Rajiv Kumar also sent the correct section, and Bhumika also sent the correct section. Well done, well done, very well done. Fine. So let's moving on to the further provision. It says the 5 heads of income, that is compute income under each head, applying the charging and deeming provision and providing for permissible exemption deductions thereunder. We all know about this, of course. Applying the clubbing provision, applying the set of provision, and then we will be able to come at the gross total income. Out of this gross total income, we have to deduct deduction on chapter 6A, that is section 80C till 80U. And after deducting those deduction, we will have our total income, that is taxable income, that is income chargeable to tax. On this income, we have to apply the rate of taxes to find out our tax liability. How we are going to calculate our tax, that we are going to discuss later. Do not worry, okay? Then meaning of total income, these are the things what we need not to revise in this chapter. I'm just going through it because I just need to remind you that what we have gone through till now. So total income means that is income which is after claiming deduction under chapter 6A, okay? Income to be considered while computing total income of individuals. So we all know about this, the salary income, partnership firm, HUF provision, clubbing provision, etc. Computation of total income and tax liability of individual, the steps what we just saw in the above diagram. It's now in one by one, that is determination of residential status. Then we have to calculate income arises, deemed to arises on the basis of the provision. Then classification of income under different heads, 5 heads of income. The deduction, the exemption which are related to those heads of income. After that, we'll move on to computation of each income under each head. After that, we will apply the provision of clubbing, then set off, then we will have our gross total income. Fine, I'm just scrolling it because we need not to discuss these topics. These topics have already been discussed in the separate or individual chapters which are related to these topics. You have already know the provision regarding all these topics. Then inter-head set-off, intra-head set-off, carry forward of losses, computation of GTI, then the deductions, the huge chapter of deduction, the gigantic chapter of deduction, having multiple deductions on the payment basis or deposit basis or income basis, etc., etc., etc. So 80C, 80D, 80E, QQB, RRB, 80TTA, 80TTB. Okay. So then we will get our total income. After total income, we have to apply the slab rate concept. Again, this slab rate concept already been discussed in chapter number 1. That is basic concept. So that up to 2,50,000 exemption for everyone. Then after that, the tax rate is 5% till income up to 5 lakh rupees. After that, slab rate is 20%. And if it is exceeding 10 lakh rupees, the slab rate will be 30%. Then the rebate applicability up to income is 5 lakh. And if you are in resident individual HUF, you can claim rebate also. Fine. So the rebate, sorry, individual, those are resident. So you can claim rebate also in this situation. If you are senior citizen, there is a concept of 3 lakh rupees exemption. If you are super senior citizen, then the 5 lakh rupees deduction exemption for basic exemption limit you can claim. So these are again the old provision what you have discussed in the earlier chapters. There are some income which is going to be taxable at a special rate. And these incomes, these topics, I have discussed with you in the capital gain chapter. Section 112, that is long-term capital gain, other than section 112A, that is going to be taxable at the rate of 20%. 112A capital gain is going to be taxable at the rate of 10%. 111A is a short-term capital gain on transfer of equity shares or equity-oriented fund via recognized stock exchange after paying STT, that is going to be taxable at the rate of 15%. 30% is for casual income. That is also we have discussed. And except any income other than these income section, those incomes those are not going to be taxable as per special rate of income, going to be taxable as per slab rate of income. Clear? So what we have discussed, we have discussed these topic in capital gain topic already. Rebate, you can claim rebate under section 87A where total income is less than or up to 5 lakh rupees. And surcharge will be applicable if your total income exceeding 50 lakh rupees. So rebate can be claimed by an individual who is a resident, and that can be up to only rupees 5 lakh income. So if you are a non-resident, you cannot claim a rebate. If you are total income exceeding 5 lakh, even in that case, you cannot claim the rebate. In respect of rebate, there was a special provision that is also discussed during our capital gain topic that 87A rebate cannot be claimed from the tax under section 112A, which is calculated upon the long-term capital gains. So rebate is not applicable only on this kind of income. In any other income, rebate can be claimed if your total income is up to rupees 5 lakh. Next, the provision says surcharge will be applicable if your income exceeding 50 lakh rupees. We all know that in case of individual, HUF, AOP, BOI, and AJP. The surcharge concept has been also discussed in your chapter number 1. But I might feel that because surcharge provisions are little messy, little complicated, so let me discuss that surcharge concept with you with the help of examples. So you will understand the concept of applicability of surcharge in different scenarios. Fine. I have made a diagram for surcharge. I already upload this diagram also. You might see now. Okay. So new surcharge provisions for individual, HUF, AOP, BOI, and AJP. Case 1 and case 2. So there are technically 2 cases. That is case 1 and case 2. Case 1 says that if total income does not consist long-term capital gain under section 112A, short-term capital gain under section 111A, and dividend income. So if your total income does not include any income out of these 3 income, then the surcharge provisions are normal concept. There is no new concept regarding the surcharge provision. So we are discussing about this case first. Fine. So if your income does not include, any of these 3 income, then the surcharge provisions are as normal provision, which is very simple. That if income is more than 50 lakh upon 1 crore, that is 10% on tax. If it is more than 1 crore up to 2 crore, the surcharge will be 15% on tax. If it is more than 2 crore up to 5 crore, then it's 25% on tax. And if it's exceeding 5 crore, then that is 37% on tax. So this is a very simple concept. There is nothing complicated in this concept. So if your income does not include long-term cap gain 112A, 111A, or dividend income, surcharge applicability will be as per normal condition. But the problem arises when your income include these kind of income. If your income include any income, if it is section 112A, 111A, or dividend income, then the surcharge concept technically change. How it changed? Let's see. The point A says, the condition A says, if total income, including 112A, 111A, or dividend income is up to 2 crore. So if your TI is up to 2 crore, even after including these 3 income, whether all 3 or 1 of or 2 of out of these 3. So if your TI including, if you have also earned income under section 112A 111A and dividend. But even after including it, if your TI is up to 2 crore, then if TI exceeding 50 lakh up to 1 crore, surcharge will be 10% on tax. If your TI is more than 1 crore up to 2 crore, then surcharge will be 15% on tax. On tax of normal income or special rate income. So whatever is your total tax, surcharge will be either 10% or 15% if your TI does not exceed 2 crore rupees after including these income. Clear? So after point number 1, we will read point number C. We will discuss point number B later. So A says if your total income including 112A, 111A and dividend is up to 2 crore. And C is the opposite of A. That if your total income including these three income is exceeding 2 crore. So it was saying up to 2 crore, then case A applicable. If it is exceeding 2 crore or exceeding 5 crore does not matter. So if it is exceeding 2 crore, then case C will be applicable. And the case C says that in this scenario, if it happens that your TI including these income exceeding 2 crore, then that is very easy to solve. Because in that scenario, the tax liability will be chargeable at the rate of 15% as surcharge on all income tax. So you should understand the concept like this, that if your TI including these three income is up to 2 crore, then surcharge it will be 10% or 15%. If it is 50 to 1 lakh, 1 crore, it's 10%. If it is exceeding 1, then it will be 15%. And if your TI exceeding 2 crore, then again very simple. You have to apply only 15% of surcharge in all cases. The main concept is concept number B. So concept B says that if your income, if TI without considering, so in case number A and C, we are taking our TI including section 112A, 111A or dividend income. So either it will be up to 2 crore after including, then case A applicable. Surcharge will be 10 or 15. And if it is exceeding 2 crore, including these income, then the surcharge rate will be 15%. But the B case saying, if your TI without considering, that means excluding these income. So if TI without including section 112A, 111A or dividend is exceeding 2 crore or 5 crore does not matter. If it is exceeding 2 crore, this condition will apply. So please read carefully. Case A is saying if your income including this income up to 2 crore, case A applicable. If your income including this income exceeding 2 crore, case C applicable. And on all other cases, case B will be applicable. So if your TI excluding section 112A, 111A or dividend exceeding 2 crore, then case number B applicable. And it says in this scenario, what will happen? In this scenario, on the tax of these three income, surcharge will be applicable at the rate of 15%. The tax liability on a special rate of income is going to be taxed at the rate of 15% of surcharge. And the tax on other income, other than these three income, if it is more than 2 crore up to 5 crore, that is 25% surcharge will be applicable. And if it is exceeding 5 crore, then there will be 37% of surcharge applicable. So you can see only in case number B, 2 surcharge provision will be applicable. On certain income, the rate is 15%, and the other part, the rate will be either 25 or 37%. In all the other cases, surcharge rate will remain the same. Either it will be 15%, either it will be 10%, or 15, or 25, or 37, etc. So you might get confused, but for the purpose to remove your confusion, I have created some example for you also. And let me tell you one thing. You just need to find out which case is applicable. If you're able to find the correct case, you will be able to solve all the question very, very easily. So now one by one, we will solve these questions. I already uploaded this chart also yesterday. In the PDF file, on the last page, I guess, I have already uploaded the surcharge provisions, this page already. So the question number 1, you have to understand the provision and then you apply the concept. Example 1, this is column example 1, let only this column. It says your other income is 70 lakh only. Other income I am talking about other than 112A, 111A and dividend. So in question it is given that your other income is 70 lakh. These three special rate of income is nil. So we do not have any special rate of income. So if we do not have any special rate of income, then the case number 1 applicable. It's a simple case. So income exceeding 50 lakh and up to 1 crore. So this is case number 1 as per our diagram. And due to this, the surcharge rate will be normal, that is 10%. It's clear? If your income is 80 lakh, other income is 80 lakh, and your dividend and special category income is 1.9 CR. So your total income including, remember, your total income including the special category rate of income exceeding 2 crore. So if it's exceeding 2 crore, including these income, then we are talking about C case of case number 2. And in that case, the surcharge rate is common, that is 15%. Clear? If the income is 90 lakh and 80 lakh, so now income is 1.7 crore. That means income do not exceed 2 crore after including the special income. So that is applicability of case number A as above. And case A says, if your income between 1 CR to 2 CR, then the surcharge rate will be 15% common. If it is 1.3 crore and 2 crore this income, so that will be 3.3 crore. So that is case number C of case number 2. Now we are discussing case number 5. This is important. Example number 5. It says your other income is 4 crore and the special category income is 1 crore. So now the TI is 5 crore, but even before including the special rate of income, your TI is exceeding 2 crore. So in that case, case number B will be applicable. And case B will say, on the special category rate of income, surcharge rate will be 15%. And because your income falls, other income falls between 2 CR to 5 CR. In that case, surcharge rate will be 25%. Clear? This is example number 6 and 7. You can solve it for your convenience, and you will feel that if you're applying the diagram concept correctly, you will really going to find out which rate of surcharge will be applicable. So that is not my topic, because I presume that it has been discussed with you very nicely in basic concept chapter 1. But because I feel personally that a lot of students are confused regarding the surcharge provision, so I just discussed this provision in this chapter also. So it might help you to calculate the tax. You can apply the provision what I just discussed with you in these examples. You will be able to solve each example correctly. You just need to understand one thing, that you find the correct case, whether there is special rate of income or not. If it is no special rate of income, then the case 1 applicable, and it's very simple. Normal surcharge rate. If there is a special rate of income, then if it is including with other income, your TI does not exceed 2 crore, then case A applicable. Surcharge rate will be either 10% or 15%. If including the special rate income, your TI exceeding 2 CR, that means case C. In that case, surcharge rate is 15%. If without including special rate of income, your TI exceeding 2 CR, then on the special rate of income, surcharge rate will be 15%. On other income, if it is between 2 CR to 5 CR, it will be 25%. If it is exceeding 5 CR individually, the other income exceeding 5 CR, then the surcharge rate will be 37%. I personally believe this is really going to help you to understand the provision of surcharge. Now in AOP consisting of only companies as member, if you are an association of person and only companies are as member, So in that case, in case of AOP consisting of only companies as member whose total income exceeding 50 lakh, but it's less than or up to 1 crore, then the surcharge rate is 10%. And if it's exceeding 1 CR, then the surcharge rate on such AOP will be 15%. So in case of AOP, which consists of only companies as a member, in that case, surcharge rate is either 10% or 15%. So for the purpose of MCQ, I personally believe this is really important provision. You can mark it as important. And for the purpose of MCQ, you can learn the provisions of surcharge in case of AOP consisting only companies. Okay. Health and education says we all know it's 4%. It will be calculated after rebate, etc. And it is applicable in all situations. If there is tax, there will be cess, HEC. Okay. So till over here, we discuss, or we can say we revise the old provision. There is no new concept till now. I just discussed the surcharge provision in detail with you for your benefit, because you might be able to understand the surcharge provision now clearly. So the new topic, what we are going to discuss today is how to calculate AMT. What is AMT? How to calculate AMT? This is section 115 JC to JL. So these are the provision what we are going to discuss right now. Before telling you about the concept of AMT to calculate the alternate minimum tax, we need to discuss why this AMT is here. We need to discuss what is the need to apply this concept. Then we will see how to applicable it, how to calculate it, etc. So before starting that, let me see if there is any query. Let me take the queries, then we will proceed to our AMT concept. There's a concept of AMT which is very interesting or confusing also. Might be at the end you might be thinking why AMT applicable by the government, but everything has a reason in this world. So there's a reason why the income tax department introduced this AMT concept. I think from assessment year 13-14 it is applicable. Before that it was not applicable in our country. So there's a concept of MAT in case of companies. So there's a concept of MAT in case of company, that is section 115 JB. That is applicable in case of companies only. That is applicable from assessment year 5-6. So there was no AMT initially. There was MAT, which is applicable on companies. That MAT concept you are going to read in your final level, of course. So from assessment year, I guess 5-6, MAT is applicable in India on companies. And after some years, government realized there must be a similar concept also for other than companies cases. So for other than companies, they applicable AMT. So MAT is minimum alternate tax, AMT is alternate minimum tax. Fine. They can also make the provision like this, MAT for companies, MAT for others. But they say no, we will create a new name. So they just jumble the words, and that was MAT, minimum alternate tax. They just change it, rearrange it, and applicable other than companies cases, that is AMT, alternate minimum tax. Okay. So MAT is not the part of your syllabus in intermediate level. That is going to be discussed in final, but AMT is the part of your syllabus, what we are going to discuss. Let's see if there is any query. Okay, Rushita is asking, salary section. Rushita not asking, technically she answered the question about the charging section. Okay, Rushita, correct, well done. Then Mr. Golti Anil is asking, sir, if an assessee has 112 income and also other income, can he claim 87A? You might typed it wrong. You might be asking that if an assessee has 112A income, rebate is applicable. But if you are asking 112, let me tell you, if you have a long-term cap gain under section 112, then you can claim rebate. There is no problem. But the TI should not exceed 5 lakh rupees. So whatever is your 5 lakh rupees tax, if rebate is applicable, you can deduct the rebate amount even out of the income of section 112. You cannot claim rebate out of the tax which is on income of long-term cap gain in section 112A. But as per you asked that 112 income, yes, rebate can be claimed. Mohammed K is saying 112 also considered. in case B. What is case B? No, we are talking about, yes, for the purpose of case number B, 112 will be the part of other income. Only section 112A, 111A and dividend. These three income will excluding or including concept. 112 or other short-term cap gain, they do not affect the rate, the chargeability of surcharge provision. Okay. Mohammed K is saying, in short, can we say surcharge on special income does not exceed 15%? Yes, exactly. Correct. You exactly find the correct point. In case of a special rate of tax, surcharge cannot exceed 15%. Whatever the amount of income does not matter. In case of a special rate, surcharge will be always 15% if it is going to applicable. Okay. Next, Darshan is asking, surcharge is calculated on total tax after rebate and cess. Sir, no. Surcharge is after tax. Clear? And understand one thing. If there is rebate, there cannot be surcharge. Understand? Because surcharge will be applicable at least your income exceeding 50 lakh rupees. At least. And rebate will stop if income exceeding 5 lakh rupees. So surcharge and rebate cannot be applicable in the same question. Either it will be rebate or it will be surcharge. And cess will be calculated after applying or added the surcharge concept. Cess is the last concept. You cannot apply surcharge cess before surcharge. Okay. So Manisha is saying, sir, surcharge charge is not available on Boot BOS. I have uploaded this chapter notes and surcharge is a part of the PDF I uploaded yesterday. I have uploaded from my end. So believe me, find out all the provision. The last page you might get this surcharge concept. I uploaded with the provisions. Next is Mohammed K is asking, applicability of surcharge on casual income is based on assessed total income or on the basis of casual income separately. On total income basis, Mohammed, there is no concept of individual casual income based surcharge taxabilities. Depend upon your total income, including the casual income. Golty Anil is asking, sir, if an SSC has 112A and also other income, can he claim 87A? He can claim the 87A only on the tax which is applicable on other income. For example, the tax on other income is 6,000 and the tax on 112A is 10,000. So his total tax is 16,000. On other income, it's 6,000. And the long-term capital gain section 112A, it's 10,000. And we have rebate of 12,500. So we can only claim the rebate of 6,000. So that tax will be zero. And the tax under section 112A, that is 10,000, is the tax liability. You cannot use the rebate out of 112A tax. Only the part of tax which is on other income can be utilized against the rebate under section 87A. Okay. Goltian is asking, sir, from total income, there will be 100% question, right? What does that mean? I don't understand. What you want to ask, Anil? From total income, there will be 100% question, right? What does that mean? If you are asking that there will be a question in your examination out of this chapter, then I can assure you, yes, there will be a question out of this chapter. That is 100% surety. But if you are asking this, then I have answered you. So now the AMT concept came. What is AMT? Why is AMT? How is AMT? We are going to discuss one by one. Before that, let me tell you why it has been introduced. Then you will be able to understand the concept, I guess, more easily. So, okay. So what is the AMT story is this? Like an examination, nobody is going to ask you why. Why deduction is there? Why is AMT? Nobody is going to ask you why about the provision. They are going to ask what is the provision, how it needs to be implemented, etc. But I'm just trying to make you clear the concept why AMT is there. So before that, you should understand, in case other than a company, we have to calculate the tax liability as under. So now you are going to listen a very new thing regarding your income tax. So tax liability will be calculated as under. You have to calculate tax as per normal provision of income tax. Till now, what we have discussed, that is a normal provision of income tax. Like need to calculate the GTI, then the deduction process, then the TI, then the tax upon this. If there is special rate of income, then there will be tax as per the special rate, 10%, 15%, 20%, 30%. And on other income, that is salary, etc. income, which is going to be taxable at per slab rate. Sorry, slab. Depending on person wise. Okay. So this is the way how we calculate tax, then rebate, then surcharge, then cess, etc. So that is my tax liability as per the normal provision of income tax. So whatever provision you have discussed till now was about this. So till now we thought that this is my tax liability answer in the examination. So let me tell you, no, this is not the end. That's why it's income tax. Do not bother about it, but this is not the end. The story still continues. Now a new concept which says AMT. So after reading AMT, before AMT, this is my tax liability after applying surcharge, cess, etc. That is my correct answer. Fine, till now. But after applying or applicability of AMT, now the question arises. In this case, you have to calculate tax once as per the normal provision of income tax. What is the normal provision? Till now, whatever we have discussed, that is the normal provision of calculating tax. And then you have to calculate the AMT tax also. How we will calculate AMT tax? I will tell you. First of all, technically, you have to calculate two taxes to solve the correct tax liability in the examination. I know some of you might be saying, what is this happening? इतनी मुश्किल से तो टैक्स सिंगल निकालना समझ आया था और नाउ वी हैव टू कैलकुलेट वन मोर टैक्स सो इफ इट इज एन एग्जामिनेशन दे आस्क यू टू कैलकुलेट tax liability. So the correct tax liability need to be calculated like this. You have to calculate your normal tax. Then you have to calculate your AMT tax. AMT tax calculation is very easy. Till TI, it will be same. There is only one rate you need to apply. So do not worry. Do not take tension. Just relax. So we have to calculate our tax as per normal provision. Then we have to calculate AMT tax. And whichever is higher will be your tax liability. That will be your answer. Till now. I'm not saying this is your final tax liability. Till now, we can say that after AMT provision, if somebody asks me how to calculate tax, I will say you have to calculate your tax as per normal provision of income tax. Then you have to compare it to the AMT tax. And the higher will be your tax liability. That will be your answer in the question. Understand? Interesting? So interesting. So much to learn. So these kind of things, generally normal people does not know. They think that the tax is this only one concept, what we discussed in point number 1. But there is one more concept that is called AMT tax. So now let me tell you why AMT has been applicable. Why AMT is there. Is the reason why department has implemented the AMC provision over here. Suppose there is Mr. A, an individual, and Mr. A running a business in a special economic zone. Remember, SEZ concept, You might have gone through it in, I guess, chapter number 3. In chapter number 3, this concept has been discussed with you, which says that if any business or undertaking work in a special economic zone, then you are able to claim a special benefit if the working in a special economic zone. So anybody can tell me what is the benefit regarding it? Okay, fine. Skip it. The section 10AA talks about it. And it says your profit into export turnover upon total turnover. You can claim deduction under section 10AA, either 100% of this value or 50% of this value. For first 5 years is 100%, for next 5 years is 50%, and for another 5 years you can claim the benefit. So suppose Mr. A, profit of this business was, suppose, 20 crore rupees. Clear? And he is eligible for section 10AA deduction. And he claimed full 20 crore rupees deduction under section 10AA. So what will be his income for this assessment year? For example, we are talking about assessment year 23-24. So his income will be nil. So what will be his tax liability? That will be nil. So you can see Mr. A was able to pay tax because he's earning a lot of income, a lot of profit, like 20 lakh rupees. But he need not to pay this tax due to a deduction, a tax benefit, a tax advantage, a tax holiday, which has been provided under the income tax. Accounting does not provide it. There is no this kind of benefit in accounting provision. But income tax provide for the benefit of country, to encourage the business, to encourage the industry, to encourage the economy. Income tax provide these kind of reduction. Take one more example of section 35AD. There are some specified business in which you can claim deductions of all the revenue or capital expenditure has been incurred before the commencement of business except cost of land, financial instrument, and goodwill. You have already gone through it under PGBP Act. Okay, we have discussed it, of course. Suppose there is a hotel which takes the benefit of section 35AD. Clear? And in first year of business, it earn a profit of 5 CR. But under section 35AD, the accumulate capital expenditure and revenue expenditure which has been capitalized in the books of account comes to rupees 21 crore. So section 35AD, this is the net profit before section 35AD. So section 35AD deduction is 100%. So 21 crore can be claimed as deduction. So there will be a loss of 16 crore. So technically business was in profit. It can pay tax, but it need not to pay any tax because we have tax advantage. In next year, it earns 8 crore rupees profit. Still we have a loss of 16 crore. We can set off it. No tax again in next year also, and so on. So you can see in example 1, in this 10AA, and example 2, in 35AD, you can see that business was able to pay tax, but because it was in a running condition. But they are not going to pay any taxes for certain years due to the tax benefit or tax advantages. So it will affect the economy in a reverse way. So government provides this tax benefit for the purpose of course, industries, for the purpose of benefit of business, etc. But in a regressive way, in a reverse way, it technically affects the government tax structure because income tax says it a progressive. The characteristics of income tax, it's a progressive in nature. Progressive means those who will earn income high need to pay tax at a higher rate. Those not are earning any income, like up to 2,50,000 is exempted. Why? Because if you are earning that much low, there will be no tax. So low income, no tax. As the income will increase, the tax rate will increase. So the progressive rate tax means that the tax will progress as the income will progress. So those in India not earning anything or earning very few need to be taxable at very lower rate or almost nil rate of tax. And those are earning high, the huge businessmen, they need to pay the higher tax. That's why slab rate has been created. After 10 lakh, 30%. Why? Because you are earning more than 10 lakh rupees. You are a good person in India. So you need to pay higher taxes. And that tax, what we collect from those person earning tax, earning income at a higher level, going to be utilized for the benefit of those people, those are not earning or earning very less. So out of our tax, government provide free medical facility to these kind of people, free educational, free schools, free college, free ration, etc. How it came? It came from our tax. So those are earning huge, need to pay huge tax. That's the meaning of progressive tax structure. So that was the concept that those are earning huge need to pay the tax higher. But due to this advantages of deduction, you can see due to the advantage of these kind of deduction, 10AA, 35AD, 80JJAA, 80QQB, 80RRB. There might be business, those can pay tax. They can pay tax because they are earning huge, but they are not paying tax because they are claiming some kind of deduction. So government think we need to collect some taxes from these organizations. Those are technically not paying tax due to these deductions. These 5 deduction has been notified: 10AA, 35AD, 80JJAA, 80QQB, and 80RRB. These are in your syllabus. For intermediate level, only these 5 need to be checked out. So if somebody is not paying taxes due to these deduction, then government will say no. We will take tax as per AMT provision from these persons. So you can say, as per normal provision of income tax, their tax will be 0. But now as per AMT, a calculation will be made. And on that calculation, the tax rate has been fixed, that is 18.5%. It's a fixed rate. For any individual, say citizen, there's no difference. A fixed rate will be applicable on AMT income. AMT income will be called ATI, adjusted total income. How we are going to calculate it, I will tell you later. But department thought that those person earning huge amount of income and not paying tax due to the tax benefit has been given by us under section 10AA, 35AD, 80QQB, 80RRB, and 80JJAA. They should pay tax in our country for the benefit of revenue collection. So you might be thinking, then what is the benefit of these deduction? No, relax. The benefit still will be there. The department says, if suppose the normal tax was 0 and AMT tax was suppose 2 lakh, you have to pay the higher value. So from this organization, I will ask to pay tax of 2 lakh rupees in this year. This is suppose year 1. So you might be thinking now, what is the benefit of section 35AD, 80QQB, RRB, JJAA, or 10AA? Because we need to pay the tax. Then why the deduction has been created? But department say, do not worry. We have find a way also. What is the way? You pay 2 lakh rupees as per AMT tax. So this 2 lakh will be your credit, AMT credit, like ITC in GST. So we are just asking you to pay. You need to pay 2 lakh rupees to us in this year, and this will be your AMT credit. You can utilize this credit in future taxes. So we are just taking this profit, taking this tax as a deposit with us. But you can claim the ITC, the technically credit of AMT credit for this tax in future. Kaise? Suppose in year 2, your normal tax is again rupees 1 lakh. And your AMT tax is, suppose 1,80,000. So if your AMT tax again higher, then in this year you also need to pay 1,80,000. You need to pay 1,80,000 as your tax liability. Obvious, you have to pay your tax as your tax liability, but you will again have your AMT credit. AMT credit is AMT tax minus के normal tax. So in this situation, in this year, you will have your AMT tax of 80,000. So you need to pay 180 to the government. But relax, we have excess charge only 80,000 because in either case, you need to pay 1 lakh also. Due to AMT, how much excess you paid? You just paid 80,000 excess rupees. So this AMT excess will be now 80,000 credit again. So now your cumulative credit is 2,80,000. You can use it, but not in normal years. You can use it only in the year in which your normal tax is higher than AMT tax. Suppose in third year, your normal tax is 1 lakh and AMT tax is 75,000. Higher you need to pay always. So your tax liability will be 1 lakh. So in this year, you can utilize this credit. But one is the problem. How much credit? You might be thinking, I can use only full 1 lakh rupees and need not to pay anything to government. No, government says the maximum credit you can utilize in a year is the difference of this normal tax and AMT. So in this year, the difference was 25,000. So out of this 280, you can only utilize 25,000 MAT credit, AMT credit in this year. So you need to pay to the government 75,000. Your remaining balance of AMT credit is now 2 lakh and 55,000. Now you might be thinking, why this need to be done? Why? Why you are charging this much? Clear? And if government is going to give you the credit of this amount, then what was the need of charging it in earlier? You might be thinking like this. Of course, government has other plan. Why this concept has been created? Because there is some reason. Income tax want regular flow of taxes. It does want that there must be some tax collection from the person those earning high. Those are able to pay tax. So there will be a regular flow, and you can see from this upon this 2 lakh rupees, government will you give credit after 1 or 2 or 3 years in the year in which your normal tax is going to be higher than the MAT tax, AMT tax. So till that, the interest benefit government can claim. They are going to return it after 2 or 3 or 4 or 5 years. But till that date, department will earn the interest benefit on it income. That is going to be rest with the income tax department. So there will be an additional income of department. Case 2 scenario says, suppose the business we are running under section 10AA or 35AD closed or shut down after some year, after claiming deduction for 5 or 10 years. So it technically paid no taxes because till section 10AA was 15 till 15 years. After 15 years, this business shut down. So department was waiting that we will going to collect tax after 15 years when this deduction has been finished for that assessee. But suppose what? If that business is going to be shut down within 15 years, after 10 years or after 8 years, and the same case, section 35AD business has been shut down after some year, then you are never going to collect any tax from that business. But due to AMT, now government will have that tax. So even if you shut down in any year, so that 2 lakh rupees tax, what government has been collected on the basis of AMT need not to be payback. So that is advantage. So if any business shut down in future, then the tax collected due to the AMT provision rests with the government. So that's the benefit to the government. The third scenario, the department always wants the AMT credit concept is for only 15 years. The credit concept we have discussed, like if you have credit of rupees 2 lakh in year 1, then up to 15 year you can only take the credit. So if any business does not able to claim that benefit within 15 years, then this tax will remain with the government for forever. So technically, what I'm trying to explain you, and why I'm trying to explain you, because when I'll teach you AMT concept, the provisions of calculation, a lot of students might be going to ask me, sir, what is the need for AMT? Why government is charging? Why government gave us the benefit if they want it back? And what is the benefit if they are going to pay back the AMT as credit to us? So if you will read all this concept, then you will understand 2 or 3 things. That yes, there are certain business, those can pay income tax easily, but not paying it because of the tax advantages. So from those business, government wants a regular flow of income to provide the benefit to the society. If they'll start paying tax after 15 years, huge amount of tax after 15 years, then what, for till 15 years, how government will survive? How they will do beneficial activities to the society? How they will develop infrastructure, etc. So government wants a regular flow of income every year, so they can run their activities. And there is a other point also, government knows that if we'll charge AMT concept, a lot of businessmen will not able to take the credit, because till 15 years, if their normal tax is less than the AMT credit will expire. Government take the benefit of interest on that deposit what we have from the in the name of AMT tax. And if the business shut downs after 3, 4, 5, 6, 7, 8 years, then the tax collected as the AMT will be rest with the department. So department is very smart. So when they create some provision and you might thinking, what is the need of this provision? No, there must be something what we are not understanding. Why I discuss with this topic? Because in the notes, in the study material, they did not elaborate it like this. So there might be students which might be very confused. Those need to understand the concept. Why the AMT is here? So might be you are able to now understand why AMT is here. Because this why is very dangerous question. If it is your mind, you will be really confused regarding the applicability of AMT or anything in this word. So now AMT, I'm just going to tell you how to calculate and the practical calculation, the implication, etc. Because what is the meaning of the concept of why it has been introduced? We just discussed. Okay. So the Income Tax Act 1961 contains profit-linked and investment-linked deductions in order to encourage investments. That is like section 10AA, 35AD, etc. In various industries and infrastructure facilities, taxpayers who are eligible to claim such reduction end up paying no income tax or very marginal. So technically, those are availing section 35AD, 10AA, etc. Those are actually not paying any tax or very few amount. Even when they are able to pay tax, marginal income tax, though they are capable of paying higher taxes, but they are not paying because there's a tax advantage, of course. It has to be kept in mind that our government also needs regular, consistent inflow of tax, which is one of its major source of revenue to fund various expenses for the welfare of the country. Hence, in order to ensure payment of reasonable tax by such reasonable tax, and government say we are not charging tax, we will going to give you the credit. So they cannot oppose it. You said that we are not going to pay any taxes if we are claiming section 10AA, etc. deduction. Then why you are charging tax? So they can object it, but government say relax. We are just taking the amount of tax as a deposit from you right now, and we will return it in the nature of credit. So that is a very smart move made by the department. So there is a reasonable tax by such zero tax paying, marginal tax paying entities. The concept of AMT has been introduced. So this is exactly the same is happening on companies also. So for the purpose of companies, MAT, minimum alternate tax, has been introduced, and for other than companies, AMT has been introduced. So if any of you is not able to understand what we just discussed, that why AMT has been applicable, why concept, that because the business can shut down, etc. So that is not in your syllabus. They are not going to ask you why AMT is able. If they are going to ask you why AMT is able, you need to write this answer in your this paragraph in your answer. Fine. That is just to make you to understand the concept more clearly. That is not the part of your examination. Clear? Chapter 12BA contains a special provision for levy of alternate minimum tax in case of person other than a company. Why other than a company? Because for company, we have section 115JB in your final examination. Any person other than a company who has claimed deduction under any section other than section 80P, that is for trust, etc., included in chapter 6A under the heading C, that is deduction on certain incomes, or under section 10AA, only 5 sections you need to remember for the purpose of AMT. Section 35AD, that is going to be applicable, 10AA, and 3 reductions under chapter 6A, 80 QQP, 80 JJAA, 80 RRB. It has been written later, of course. Or investment linked reduction of section 35 AD would be subject to AMT. The provision of AMT would, however, not be applicable to an individual HUF, AOP, BOI, whether incorporated or not, or artificial judicial person, if the adjusted total income of such person does not exceed 20 lakh rupees. So technically, AMT is applicable on other than company cases. But if it is individual HUF, AOP, BOI, and AJP, then AMT concept will be applicable only if their ATI, adjusted total income, exceed 20 lakh. What is ATI, etc.? We are going to discuss. So technically, I can say, if in case of individual HUF, AOP, BOI, AJP, if your ATI is less than 20 lakh, then how we need to calculate your tax? Only as per normal provision of tax. There is no AMT calculation, no higher calculation. Whatever is your normal tax as per normal provision, that is your answer till. But if your ATI exceed 20 lakh, then you have to apply AMT concept. So if ATI does not exceed 20 lakh, that's a good news for you, because you need not to apply AMT concept. But if it is exceeding 20 lakh, that is a bad news for you, because you need to apply AMT concept also in that question. Further, the provisions of AMT would also not apply in case of individual or HUF opting for concessional rate of tax under section 115 BAC and cooperative society opting for section 115 BAD. So if you are going to pay tax as per section 115 BAC, then there is no comparison with AMT tax. Only this tax will be your final tax liability. What exactly this sentence is saying, do not worry, I'll explain in detail when I'll teach you section 115 BAC after the AMT concept. Notice saying that deduction under chapter 6A, which are linked with profit or income, they have section 80 IA deduction also, 80 IE, etc. But these all will be part of your final provisions, not at your intermediate level. So for the purpose of AMT, they have been specified that section 10AA, 35 AD, and only 3 reduction, these 3 reduction, 80 JJAA, 80 QQB, 80 RRB will be considered. All of reduction you need to skip. Okay. So I have made a AMT summary for you to make you understand the provision in a very simple way. AMT will be applicable as follows. Find out regular income tax liability as per normal provision of Income Tax Act. Clear? Then first of all, you need to find the ATI. Because only after finding out the ATI, you will be able to understand that do I need to applicable the AMT provision or not. If ATI does not exceed 20 lakh rupees in case of individual, HUF, AOP, BOI and AJP, you need not to applicable AMT provision. In case of partnership firm and LLP, there is no 20 lakh limit applicable. You have to apply the AMT provision. There is no ATI restriction. ATI restriction is only in case of individual HUF, AOP, BOI and AJP. Clear? So how to find out the ATI? How to calculate it? How to calculate it? You can see it. We have to take the total income as per Income Tax Act. As per the normal provision, you have calculated the TI. The exact TI you calculated for the normal case, we need to take over here. For the purpose of ATI, you need to calculate the normal TI. GTI less deduction as per the normal provision. We have the ATI. We have the TI, sorry. Then now at that TI, we have to add these three deductions if claimed. So if in deduction, like we can say, you have calculated your GTI and certain deductions you have claimed under section 80C to 80U. Then we have our TI. So that TI we need to put over here. And if in these deduction, if we claimed 80 QQB, I taught the student in my classes 80 QQB full form is 80 QQ banai. Very complicated for the purpose of royalty. So if you have claimed 80 QQB or 80 double J double A or 80 RRB, if you have claimed these deduction over here, then you need to add it back. It is just like in case of PGBP, we have to disallow some expenditure, etc. So technically, these deductions need to be disallowed if already has been claimed. If section 10AA deduction has been claimed in PGBP, special economic zone, if it has been claimed in the question, we need to add it back. Clear? Section 35AD deduction, if we have claimed in PGBP, we need to add it back. But there is one story. For example, if this TI was, suppose, 1000 rupees, we have claimed 80 QQB for 50 rupees. Then we have to add it back in our TI. 10 double deduction we have claimed 200. Then I need to add it back 200. And now suppose we have claimed 35AD deduction for a building, which amounts to rupees 150. Then we need to add it back 150, but the provision says if deduction under section 35AD has been claimed in respect of any asset and it has been added back to calculate the AMT ATI, then on that addition, we need to calculate the depreciation. So in case of building, the DAP rate is 10%. So DAP is 15. And that is going to be deducted. So we are not taking the deduction under section 35AD. Suppose if there is no section 35AD, then what we have claimed on that building, the depreciation. And the concept says in PGBP, if you have claimed 35AD deduction, you cannot claim the depreciation. So we are just doing the reversal. That because AMT says you cannot claim the deduction under section 35AD. So we say, okay, keep it the deduction, but now we will claim the depreciation on it as per the normal provision of depreciation. So only in case of section 35AD, if you're going to add the value, then you need to claim the deduction. You need to reduce the depreciation deduction out of to calculate this ATI. And this total will be called ATI. So if it is exceeding 20 lakh rupees, the AMT provision applicable in case of individual, HUF, AOP, BOI, AJP. If it is not exceeding 20 lakh, AMT is not applicable. But if the question relates to LLP or partnership firm, then whatever the amount of ATI, the AMT provision will be applicable. It's quite complicated. I understand that you might be thinking, why now AMT provision in the examination? We have already gone through so much of provisions, so much complication. But why this AMT? Because you are a chartered accountant. You are doing the course of chartered accountant because nobody else can understand these provisions. So you have to understand it. Because if we say why it's complicated, then who is going to learn these provisions? So we are the supreme authority in case of income tax, GST, accounting, etc. You have the supreme knowledge about it. So you cannot say this, why this provision in my syllabus? Because if it is not in your syllabus, then who else will read these kind of provision? In the starting of class, I told you, you need not to tell anyone about your struggle. The name CA speaks everything. So that's why, because department says, this course says, our institute says that if you will think that you are not able to understand these provisions, then who is there to teach people about this? Who is there to calculate about this? So please understand, this course is so much important. This course has so much of value, so much of trust of people in this course, only because they know that you have the supreme knowledge regarding these kind of subjects. So please, whenever you think it's difficult, then understand that's why it's so much important. That's why it's happening. That's why people value this thing. Okay. So if ATI exceeding 20 lakh, then AMT apply. Otherwise, AMT not applicable in case of individual, HUF, EOP, BOI, AJP. Okay. Step 3, whatever is your ATI, the rate is very simple. You have to apply 18.5% as a fixed rate of tax. No other messed up tax rate like slab rate, etc. You have to apply the tax rate 18.5%, surcharge as per the normal provision, depend upon your ATI, and 4% cess. Tax liability and total income, step 1 or 3, whichever is higher. Like step 1 was normal provision of income tax, or AMT tax, whichever is higher your tax liability. And if AMT tax is higher, then ATI is your total income. If normal provision tax is higher, then your TI is your TI. Excess paid can claim as AMT credit in 15 years. This year, in which you are paying tax as per the provision of AMT. This is your normal year. And after this year, the remaining 15 years, you can take the credit of your AMT paid. Credit can claim in the year in which normal tax exceed the AMT. So you can only claim the credit of tax only in that year in which your normal tax exceed the AMT. How much credit you can take? The normal tax minus AMT. I have explained you with the help of an example, of course. Tax credit allowable even if adjusted total income does not exceed 20 lakh in the year of set. You can claim that tax credit in that year only, in that year also, in which the AMT is not need to calculate. It says, for example, in year 1, your normal tax was 1 lakh and your AMT tax was 1,40,000. So what we have to pay to the government? 1,40,000 your tax liability. In this, 40,000 will be your credit. Clear? In the second year, normal tax was 50,000. Or AMT tax was 60,000. So again, you need to pay 60,000 as your tax. And your credit will be again 10,000 more. Total credit will be 50,000. In the third year, normal tax was 35,000. AMT was not applicable because ATI was less than 20 lakh. So you need tax liability will be higher, 35,000, but you need not to pay this. You can use the credit. So we have the credit of 50,000. FIFO method will be utilized. Always first credit will be given from first because the 15-year limit is there. So you need to use FIFO method to avail the credit. So out of this 35,000 can be claimed as a credit. There will be no tax liability. There's no tax to pay to the government. The tax liability was 35,000, but you need not to pay anything. So now we are left with the 5,000 credit of this year and 10,000 of this year. So it says if you have credit and if in any year AMT provision is not applicable, even that you can take the benefit of your credit. Okay, this is a good provision, of course. So now these all provision, what I have explained you with the help of a summary is over here with the help of the explanation and the paragraph. So accordingly, where the regular income tax payable by a person for a previous year computed as per the provision of Income Tax Act 1961 is less than the AMT payable for such previous year. So what it says if your normal tax is less, AMT tax is high, then you have to pay AMT as your tax liability and your adjusted total income will be treated as your total income. So what I have explained to you in this step number 4, here's the theoretical part of this. Fine. So shall be deemed to be the total income of the person. Such person shall be liable to pay tax on the adjusted total income at the rate of 18.5%. Surcharge and cess will be there. However, in case of cooperative society, please read it carefully. The AMT tax rate is 15%, not 18.5%. So very important for the purpose of your MCQ. How to calculate ATI, I have explained to you in a very simple format. You can see it. You have to increase your TI. You have to increase. That means you have to add section 10AA deduction, section 35A deduction, but section 35 deduction, you need to claim the depreciation. You need to reduce the depreciation which will be or which would have been provided if section 35 AD was not there. And 3 deduction, you need to add back if that has been deducted after arriving the total income. The tax credit concept we have discussed. The tax credit is the excess of AMT paid over the regular income tax payable under the provision of the Income Tax Act 1961 for the year. Such tax credit shall be carried forward and set off against income tax payable in the year to the extent of excess of regular income tax. Whatever the provision is saying already has been in point number 2, 3, and 4. So that's why I discussed the summary provision earlier, because the language is not that easy to understand. So after reading the summary provision, now you can understand what it is saying. It is saying credit of the amount you can claim. What is excess to the normal tax? Excess of AMT over the regular income tax, that is your credit. When we can claim it in the year to the extent of excess. How much of the credit can be claimed? The excess of normal income tax over the AMT. And the credit can be carried forward and set off for the maximum period of 15 years after the year in which you paid the AMT tax. Except that year, the next 15 years you can claim the credit. The tax credit allowable even if ATI does not exceed. This is the provision we have discussed, the point number 4. Even if the ATI does not exceed in any year, that means AMT provision not applicable. But if you have credit of AMT, you can utilize that against your normal tax liability. Clear? Note says the provision of the Income Tax Act include advance tax, interest under section 234 ABC, etc. shall also apply to an assessee paying AMT. So if there is AMT, again this provision will be applicable as normal provision. That was AMT for you. Now the last topic of this chapter number 8, that is section 115 BAC, that is a new tax regime under income tax. So a normal tax calculation, then you have to compare it with your AMT, and now the section 15 BAC. After section 15 BAC, I can assure you, yes, this is the last. After that, there is no more complexity, no more kind of tax calculation. So if section 115 BAC is applicable, AMT won't be applicable. What is that case? I will make you understand. First of all, we have to understand the important nature of this section, what benefit you need to pay to take the benefit, what deduction that is allowed and that is not allowed, depreciation allowance on new tax slab rate we also have in section 15 BAC. So section 15 BAC we will be discuss. We are going to discuss after a short break, but before that, let me take the queries. Then we will go on a break, 10 minutes break, and then we will resume. We will have a small story for you, and then we will start section 15 BAC. So let's see. Is there any query? Okay, Varsha is saying your notes are not getting in assignment and notes. Look, I have already explained you in the last session that notes on the website portal, I guess that BUS knowledge portal, you have to log in with your CRO number, etc. Then you have to going to the topic, that is income tax, and then you have to see the notes. You can type my name. In that case, you will get the notes by the name. Or if you're not finding the note, there will be shown in that tab uh, with chapter 8, computation of total income and tax table. Notes are there. Do not worry. If they are not there or you're not able to check it out, I will check after the class and I'll upload it again if it's not there. But I have uploaded with my hand. So you might be mistaken or you might be checking in the wrong place, but it is there. Okay, so Varsha is saying, okay, Anil is saying, no, sir, we are absolutely fine. We got your point. Okay, well done. So AMT, if you are able to understand the AMT concept, it's very interesting because a lot of students only just know the AMT applicability. But if you'll ask them why AMT, if there is credit also, then why government apply AMT? So there is a concept. That's why I just taught you what is the concept of AMT. Because you should understand that there is AMT, even you will get the credit, but there is certain things that government is scared of, the shutdown of the business cases. Government need the regular flow of businesses. Government needs to see that yes, this business can pay. Then we need to take the benefit, and government tax earn income due to the interest value, etc. What they have with the government, or if the 15-year expire, then the credit is with the government. So there is a lot of reason why this AMT concept has been introduced. Okay, next is Mohammed surcharge on 112 income may exceed 15%, unlike 112A, 111A, and dividend. Yes, of course. 112 surcharge can be exceed because that is going to be taxable with the help of other income. While calculating rupees 5 lakh limit for rebate, is special income also considered? Yes, your TI will be considered, and TI includes your all income, whether it's a casual income or a special rate income. Okay, Mohammed? Oh, Varsha is saying this is for the person who are taking benefit at maximum and avoiding tax liability. When income becomes chargeable, they will shift some other benefiting. Yes. So there are some person who see that yes, section 10 AA benefit is for 10 or 15 years. So now we avail the benefit of this section in this special economic zone. So from future, we need to pay tax again. So we can shift the benefit in some other section. So they will also curb, government going to curb them with the AMT provision. They need to pay tax. They can shut down the business, then start a new company with another name to avoid the tax liability. So with the help of AMT, they cannot do this. Well done, Varsha. Sir, when any Bhumika is asking, sir, when any person liable to pay tax is paying tax very less or not paying tax due to rebate, etc., will pay tax under AMT? Correct. If the ATI exceed the 20 lakh, then they have to pay tax. Whether you are a salaried person or not, it does not make a difference. Darshan saying, understood AMT, sir. Well done. Anil is saying, sir, could you please tell me what if person failed to follow AMT provision? Income tax department will issue the notice. Because all your income tax filing is going to the storage of department, and the software will find out that this person need to apply the AMT and they did not apply the AMT. This person ATI exceeding 20 lakh rupees, and if you did not pay tax as per AMT provision, they will issue notice, and if they will issue notice, they will ask for you tax, they will ask for penalties, which is huge, they will ask for interest, etc., etc. So that is the consequences if you do not follow the law. So there is no more query after this. So I guess now moving on to our break. So Manishji, can we go for a small taken your tea, coffee, etc. So we were discussing the provision regarding the AMT, and we completed our AMT concept. So the last topic which need to be covered under this chapter is section 115 BAC. Let me see if there is any query. So first of all, I need to answer that. Okay, so Anil is asking, sir, many people nearby my village are earning income more than 2.5 lakh by way of working as a labor, etc. But still they are not paying income tax. So could you please explain me why income tax department is not issuing notice to them? So up to 5 lakh, there is no tax. So why income tax department will issue notice to them? And listen, it's not easy to find the person who are not paying tax in India, in our country, because the population is so huge. They might be getting the amount in cash. So how department will come to know that they are earning something if they are receiving that amount in bank account, etc.? Department may come to know that if there's some income, but they might be getting the amount in cash. So how this is possible for a department to technically find those kind of people? So practically it's very, very, very difficult. And of course, up to 5 lakh rupees, there is no income tax. So why department will take tension for these kind of person? And yes, if department will come to know that somebody is having income which comes in the taxable limit, there is some tax liability on it, and if it's not paying it, then yes, department can issue notice to that person. But practically, it's not that easy to manage 135 crore population to find out those person not paying tax out of those 135 crores. It's not that easy, but department is working on it. Okay. Varsha is saying, I checked once again. I got last assignment on 24 July. Okay, I will upload it again, but I know that I uploaded yesterday, but I'll upload again after the class. Okay, Varsha? Okay, relax. So now, moving on to section 115 BAC, but for that, a very short story with you for your motivation to prepare you for examination, because we are running in August, and after 2 months, there is your examination. So you might be having the fear of examination. It's a true story, of course. It's a real story. And what happened? And the story will be in Hindi, of course, I told you earlier also. So, एक बारी एक हॉलीवुड स्टार है, बहुत बड़े हॉलीवुड स्टार है. उनका एक इंटरव्यू मैंने देखा, एंड उन्होंने बताया कि उन्हें एक मूवी की शूटिंग करने के लिए एक सीन करना था जिसमें उन्हें प्लेन से जंप करना था. और डायरेक्टर ने कहा था कि हम स्टंटमैन यूज नहीं करेंगे, आप ही को ये सीन करना है. तो उनका 15-20 डेज का ट्रेनिंग प्रोग्राम था. उसके बाद वो जंप वाला सीन एग्जीक्यूट होना था. एंड ही वाज रियली अफ्रेड ऑफ हाइट. सो ही वाज रियली स्केयर्ड. ही कैन नॉट से नो टू डायरेक्टर्स बिकॉज बहुत इंपॉर्टेंट सीन था मूवी का, बहुत बड़ी मूवी थी. एंड उन्होंने कहा ठीक है, आई विल डू इट. बट बिकॉज ही हैज अ फियर इन हिज माइंड दैट आफ्टर 15 days there is a jump scene. उसकी ट्रेनिंग चलेगी अभी 15 days तक, एंड देन वो सीन होगा. तो एवरी डे ही वाज थिंकिंग कि मैं किसी तरह से बच जाऊं या क्या होगा, एंड दैट व्हाट विल हैपन, ये भी हो सकता है, आई कैन डाई, और मेरे से नहीं हो पाएगा. ही वाज वेरी 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 नर्वस एंड स्केयर्ड ऑफ दैट काइंड ऑफ सीन. सो शूटिंग के लिए प्रिपरेशन हुई, बाकी सीन होते रहे, उनको ट्रेनिंग कराई गई उस सीन के लिए. एंड आफ्टर 15 days देन जब वो दिन आया, वो एयरक्राफ्ट में चढ़े, एयरक्राफ्ट स्काई में पहुंचा, एक लिमिट पर पहुंचा, डोर ओपन किया गया फॉर द जंप सीन, एंड ही रियलाइज्ड, ही सेड ही रियलाइज्ड दैट यस, अब मुझे डर लगना चाहिए था, अब, बिकॉज नाउ आई हैव टू डू दिस थिंग ना. अब मुझे डर लगना चाहिए था जंप करने से. बट इससे पहले के जो 14 days थे, उधर तो जंप होनी नहीं थी. वो 14 days मैंने अपने वेस्ट करे, उनका बहुत सारा टाइम मैंने टेंशन में वेस्ट किया, उस डर में वेस्ट किया, जो एक्चुअल में 14 days में तो होना ही नहीं था. वो तो इस मोमेंट पे होना था. तो जितना भी डर था वो मुझे अगर अब लगता इस मोमेंट पर, तो वो वर्थ होता. बट मैंने सिर्फ इस मोमेंट का जो डर था उसके लिए अपने लास्ट 14 days को वेस्ट कर दिया. उस टाइम में ठीक से ना खा पाया, ना ठीक से बाकी अपने सीन्स रिहर्स कर पाया. मैंने अपना पर्सनल लाइफ भी खराब करी, और मैं हमेशा एक अलग तरह की टेंशन में. दैट थिंग ही सेड कि आई रियलाइज्ड कि लाइफ में हमें बहुत चीजों से डर लगता है जो फ्यूचर में होने वाली है, कि वैसा होगा तब, लेकिन उसके वजह से हम अपने प्रेजेंट और आने वाले डेज को खराब कर लेते हैं और अपनी परफॉर्मेंस यहाँ खराब हो जाती है. जबकि उसका कोई फायदा नहीं है, बिकॉज वो चीज जिस दिन एग्जीक्यूट होनी है उस दिन का उसका डर होना बनता है। अगर आपको लगता है उसके लिए प्रिपरेशन कर सकते हैं, बट उससे पहले के जो डेज हैं आप उन्हें वेस्ट मत कीजिए, एग्जैक्टली जस्ट फॉर योर एग्जामिनेशन। इफ समवन ऑफ यू इज थिंकिंग कि एग्जाम आने वाले हैं नवंबर में, कैसे होगा, मैं फेल हो जाऊंगा, मैं पास नहीं हो पाऊंगा, मेरी ये प्रिपरेशन नहीं हो पाएगी, मैं कहीं गलत, देयर इज नो यूज राइट नाउ। फॉर नाउ यू जस्ट नीड टू रीड, यू नीड टू स्टडी, you need to solve question, you need to do MCQs, you need to give the mock test, etc etc etc. जिस दिन एग्जामिनेशन होगा ना, टेक ऑल द नर्वसनेस एट दैट डे, नॉट नाउ। अभी टाइम वेस्ट कर दोगे अपना आप सिर्फ उस नर्वसनेस या उस फ्यूचर के इवेंट की वजह से। जिस दिन एग्जामिनेशन हॉल में जाओगे, जब बैठोगे, डर तो फिर भी लगेगा, इट्स अ नॉर्मल ह्यूमन नेचर। बीइंग नर्वस होना कोई बुरी बात नहीं, यू हैव टू कंट्रोल योर नर्व, दैट्स व्हाई दिस एग्जामिनेशन हैज बीन process has been drafted, because we need to see how you can take the pressure. Being a chartered accountant, it's not only knowledge, but can you able to take the pressure? That's also we gone through in this course. So that actor told me and I realized, ये तब मैंने शायद सुना था जब मैं भी शायद सीए कर रहा था, and I realized कि एग्जामिनेशन जब होंगे तब उसके लिए डरेंगे, जब रिजल्ट आएगा तब उस दिन डरूंगा, उस दिन नर्वस होऊंगा, लेकिन उससे पहले का जो टाइम है ना उसको उसमें वेस्ट नहीं करूँ। एंड आई स्टिल फॉलो दिस। अगर मेरी कोई इनकम टैक्स केस की हियरिंग आती है और मुझे जाना होता है डिपार्टमेंट में, तो मैं उससे पहले प्रिपरेशन करता हूँ। वो नहीं सोचता कि डिपार्टमेंट में जो कमिश्नर है वो क्या बोलेंगे, ऑफिसर है वो मुझसे क्या पूछ लेगा, मैं उसका क्या करूंगा। देयर इज नो यूज, नथिंग, यू हैव टू प्रिपेयर योरसेल्फ फॉर टुमारो। डू नॉट वेस्ट योर टुडे फॉर द पर्पस ऑफ टुमारो। सो आई होप यू विल गेट समथिंग फ्रॉम इट। मूविंग ऑन टू आवर नोट्स, section 15 BAC. Now section 15 BAC, and there is AMT also. So when we need to calculate AMT, when we need to calculate 15 BAC, you might be getting confused. So let me clear this concept for you. Okay. So we can say in case of BAC is applicable for individual HUF. So I'm in the case of individual HUF, there will be two situations. That is either not apply 115 BAC. Either we are not applying section 15 BAC, or we can say there is a scenario in which 115 BAC is not applicable. So if this is the case in which 115 BAC is not applicable, in that case, how we need to calculate tax? Tax as per normal provision of income tax or AMT tax if applicable. That means if ATI exceeding 20 lakh rupees in case of individual HUF, AOP, VY, ETP. Okay. So whichever is higher will be my tax. And ATI will be my total income if the AMT tax is higher. And if normal tax is higher, then TI is my total income. If we apply 115 BAC, if we are satisfying all the conditions under section 15 BAC, what are the conditions, etc., we will discuss it after this. In this situation, we have to calculate tax as per 115 BAC provision. This is one tax, and normal tax or AMT tax if applicable, whichever is higher, this tax. And now whichever is lower, that will be my tax liability. So if section 15 BAC is not applicable, then your tax liability will be AMT tax or as per normal tax, whichever is higher. And if 115 BAC is applicable, then tax as per 115 BAC or normal tax or AMT tax, whichever is higher. We need to compare this tax with this tax, and lower will be my tax liability. So this will be the case, the way we need to find out the tax liability in this scenario. Now we need to understand when section 115 BAC is applicable, what are the conditions we need to fulfill for section 115 BAC, etc., etc. Let's move on to this. We are thinking we should apply old tax regime or new tax regime. So we will apply that tax regime that will lower my tax liability. So if you are applying section 115 BAC, then you need to find tax as per section 115 BAC and tax as per normal provision or AMT, whichever is higher. The lower out of these two will be my calculation of tax liability. Examine whether or not to exercise the option under section 115 BAC for availing concessional tax slab rate. So first of all, we already knew that there's a different kind of slab rate in case of 115 BAC. As per section 115 BAC, individuals and HUF have an option to pay tax. It's an optional. That means option to pay tax. It's not mandatory. If you want to apply it, you can apply it. To pay tax in respect of their total income, other than income chargeable to tax at a special rate. So those income, those are chargeable to tax at the special rate, they are going to charge at that rate of tax. So whatever is other income, only special rate is going to be applicable on that rate. So special rate income is 111A. The rate of tax is 15%. 1112, that rate of tax special is 20%. 112A, that is 15%. 111A is 15%. 112 is 20%. 112A is 10%, and then 30% for casual. So except these kind of income, the other income is going to be taxable as per the new slab rate structure. The slab rate says up to 2,50,000, there will be no tax as per the normal case also. From 2,50,000 up to 5 lakh, the rate is 5%. From 5 to 7.5 lakh, the rate is 10%. From 7.5 to 10 lakh, the rate is 15%. Then from 10 to 12.5 is 20%. Then from 12.50 to 15 lakh, it's 25%, and balance is 30%. So you can learn it like this also. There is a range of 2,50,000 in every case. So we can learn it like this. First 2.5 lakh, next 2.5, next 2.5, next 2.5, next 2.5, next 2.5 lakh. And this is balance. First is 0, then the 5 table you can apply. 5%, 10%, 15%, 20%, and 25%. Then balance is 30%. So you can write out a 2.5 lakh range from starting till 15 lakh. And then the rate is like a 5 table, 5, 10, 15, 20, 25, 30%. Clear? We can actually calculate the tax also. The tax is 0. The tax will be 12,500 fixed. In this range, the tax will be 25,000. Each tax will increase by 12,500, 37,500, 50,000, then 62,500. So till 15 lakh, your total tax will be 187,500. So if in question, the total income for the purpose of 115 BAC is given 20 lakh rupees. So up to 15 lakh, the tax will be always 1,87,500. So the balance 5 lakh need to be taxed at 30%. That is 1,50,000. There's a shortcut for you. If in question, for the purpose of 115 BAC, the income is given more than 15 lakh. Then till 15 lakh, we know the tax liability will be 1,87,500. You just need to apply the balance 30% rate on the income exceeding rupees 15 lakh. So you can easily find out the tax value. Clear? That's a shortcut for you. Condition to be satisfied for availing the concessional rate of tax. So there are certain conditions, there are certain deduction, exemption you need to waive for take the benefit of concessional rate of tax under section 115 BAC. If you want to take the advantage of these exemption, you cannot claim tax under section 115 BAC. The following are the conditions to be satisfied for availing concessional rate of tax. Certain deduction exemption not allowable. Section 115 BAC to provide that while computing the total income, the following deduction exemption would not be allowed, not even the standard deduction. Under that salary you can claim. If an individual or HUF opt for concessional rate of tax under section 115 BAC, you have to waive these deduction and exemption. First one is leave travel concession. You must have gone through with this provision under your salary head of income. So you cannot claim the exemption under LTC. The LTC is going to be taxable full value. Same house rent allowance is going to be taxable full value. No exemption can be claimed. Section 1014 talks about the special allowances. There are 6 special allowances. Exemption in respect of special allowances or benefit to meet expense relating to duties or personal expense, other than those may be prescribed for this purpose. So technically over here it is saying that you cannot claim any special allowance exemption under section 1014. But there are some special allowance like traveling, etc. You can claim the deduction or exemption of those allowances only. What are those allowances? We will discuss in page number 8.20. But for time being, we can say you cannot claim LTC, you cannot claim HRA, you cannot claim special allowance, you cannot claim daily allowances, constituency allowances, etc. You cannot claim LTC, you cannot claim HRA, you cannot claim special allowance. For the purpose of a special allowance, additional point we need to see in page number 8.20. Clear? You cannot claim exemption in respect of income of minor child included in the income of parent. So there is exemption section 1032. You must have gone through in clubbing provision. So anyone of can you tell me what is the exact exemption under section 1032 in respect of an income of a minor child club in the hand of parent? I want to see how many of you know this exemption. Section 1032 exemption, I need to know. Kindly tell me the correct exemption. Do not send the answer in hurry. Please listen what I'm saying. I'm saying I want to know the correct exemption which can be availed under section 1032 in respect of clubbing of minor child income in the hands of parent. Anil asking, sir, please in English. Sorry, Anil, the stories can only be in Hindi. Okay. Darshan is saying it takes some time for notes to be updated in the BOS portal after the faculty has uploaded itself. Might be because I uploaded or updated yesterday, so might be you will able to see it after the class, etc. 115 BAC is optional. Yes, Mohammed, 115 BAC is optional. Either you want to take it, you can take it. It's not mandatory like AMT. AMT is mandatory. You have to apply the AMT provision if the ATI exceeding the 20 lakh. But 115 BAC is optional. For senior citizen, yes, Darshan is asking for 115 BAC. The slab rate is similar to all. Whether you are a citizen, normal citizen, super senior, etc., the exemption and the slab rate is similar to all of you. Okay, Anil is saying 2.5 lakh. Mohammed K is saying 1500. I'm still saying, please send me the correct answer if you know section 1032 exemption in respect of clubbing of income of a minor child. Not yet received any correct answer. The correct answer is not 1500 rupees. The correct answer is income clubbed or 1500. Understand? Income clubbed or 1500, whichever is lower. So if you are writing the answer 1500, that is a wrong answer. Suppose the income of a minor child which is going to be clubbed is 1000 rupees. In that case, exemption will be only 1000. So that's what I'm saying. Now, please understand the question if examiner is asking. So if in option, in MCQ it is asked, and if you take the answer 1500, it's a wrong answer. And even if it's a one number question, and if somebody is writing the answer like 1500 is the exemption, that is a wrong answer. It's a 1500 or income club, whichever is lower. Clear? Okay, 10AA you cannot claim. You cannot claim section 16 deduction under the head salary, like SIN deduction, entertainment allowance deduction, and professional tax deduction also. You cannot claim interest on loan in respect of self-occupied property also. If you want to take the benefit of section 15 BAC, you cannot claim the benefit of interest. You cannot claim the additional depreciation. You cannot claim the deduction in respect of scientific research in any case. You cannot claim the section 35 AD deduction. You cannot claim the family pension deduction under section 57(2)A. Anyone out of you can tell me the deduction in respect of family pension. What is the deduction amount in respect of family pension? Let's see how many of you remember this. Deduction in respect of family pension. That is the part of income from other sources. I taught you, we discussed it in the chapter income from other sources. So any one of you can answer me, what is the deduction in respect of family pension? Let's see. Deduction in respect of family pension. What is the deduction in respect of family pension? Bhumika is asking, sir, if individual or HUF opt for 115 BAC, then we have to calculate tax as per 115 BAC. Yes. AMT, yes. Normal provision by all the three way. Yes. The answer is yes. But do not worry, in the examination, might be examiner will say, avoid the provision of 115 BAC. They might be going to ask you only normal tax provision. And remember, AMT will be applicable only if there is section 35 AD, 10AA, or those three reduction in the question, 80 RRB, QQB, and JJ. If these five deductions are not there, then AMT will not be applicable automatically. So do not worry, examiner will not create that kind of complicated question that you have to calculate all kind of taxes. But yes, there might be separate question of calculating AMT tax might be there, might be 115 BAC, etc. So we need to know all the kind of tax calculation. But in a single question, examiner might not going to frame in the same question. But yes, if you need to know the correct tax, we have to apply all these provisions together. That's why it's income tax. Okay. So nobody answered me yet. पढ़ लो बच्चों, पढ़ लो, ठीक से पढ़ो. I have told you the provision regarding this family pension. Okay, somebody answered me. Rajiv Kumar, it's 33.33% of income or 15,000, whichever is less. Yes, correct. It's 1/3 of pension or 15,000, whichever is less. That's correct answer. Mohammed K Singh, 12,500. No, wrong answer, Mohammed. What are you doing? Okay. So you cannot claim even any deduction from 80C to 80U except 80CCD2 and 80JJAA. Only these deductions are allowed. Except these two deductions, no other deduction can be claimed if you fall under section 115 BAC. Certain losses not allowed to be set off. You cannot set off any loss if you are applying section 115 BAC provision. While computing total income, set off of any loss carry forward in respect of or depreciation from any earlier assessment year. You cannot set off loss. You cannot use unabsorbed depreciation also if you want to apply section 115 BAC. If such loss or depreciation is attributable to any of the deduction referred to in one above. If that loss or depreciation is due to the deduction claimed as above, like 35 AD, etc., then you cannot claim that loss or depreciation also. Under that house property with any other head of income, you cannot set off your loss of house property from any other head of income. If you want to set off your loss, you need to only set off it with income from house property. Would not be allowed. So technically, you cannot claim any unabsorbed depreciation. You cannot claim any losses, and you cannot under the house property with any rate of income losses cannot be claimed if you want to apply section 115 BAC. Depreciation or additional depreciation. Depreciation in section 32 is to be determined in the prescribed manner. You can claim depreciation, but you cannot claim additional depreciation. Depreciation in respect of any block of asset, maximum DAP rate can be 40%. We all know that. But additional depreciation cannot be claimed if you are applying section 115 BAC. You cannot claim the additional depreciation. Exemption or deduction. While computing total income, any exemption or deduction for allowance or perquisite, any allowances or perquisite, you cannot claim any deduction or exemption in respect of any allowance or perquisite by whatever name called. If you are applying section 115 BAC, there are only certain exemption of allowances which is allowed, like traveling, etc. We will discuss it later. This is the provision which says which allowance you can claim. Only these allowances and perk allowed. All other allowances and perquisite you cannot claim if you are applying section 115 BAC. Okay. An individual opting the provision of section 115 BAC would be entitled for. So these kind of allowances only can be claimed if you are applying section 115 BAC. Traveling allowance, daily allowance, conveyance allowance, and transport allowance for blind or physically handicapped up to 3,200 rupees per month. You must have gone through it in the salary chapter, of course. An individual being an employee opting for section 115 BAC would not be entitled for exemption of perk of free food or non-alcoholic beverages provided by an employer through paid voucher. You might have remembered that there is a benefit of 50 rupees per day. If you are getting food with paid vouchers, non-transferable, 50 rupees per day benefit you can claim out of that perquisite. That is also need to be waived if you are applying section 115 BAC. Now the provision says, in case of an individual or HUF opting for section 115 BAC, total income should be computed without set off of any loss brought forward. No loss brought forward can be utilized, or depreciation, that means unabsorbed depreciation from any earlier assessment year, where such loss or depreciation is attributable. That means if such losses or depreciation is due to, attributable means due to any of the deduction listed in one above. The point number 1, which describes the certain deduction like scientific research deduction, like 35 AD, etc. So if the loss arises due to those deduction which have been listed in point number 1 above, then such loss and depreciation cannot be claimed. Such loss and depreciation would deem to have been already given effect to, and no further deduction for such loss or depreciation shall be allowed for any subsequent year. So technically what we are saying, that if you opt section 115 BAC, then if any unabsorbed depreciation and brought forward loss is there, you cannot claim in the year you apply section 115 BAC, and not in any for subsequent year also. That losses and UD will be lapsed for forever. Clear? Where there is a depreciation allowance in respect of a block of asset from an earlier assessment year, attributable. So if there is a depreciation due to additional depreciation, which has not been given full effect. So in the additional depreciation, there is a concept of if asset has been used for less than 180 days. For example, there is an opening WDV of block of asset at 10 lakh value. We purchased a new asset of rupees 1 lakh less than 180 days. And it is eligible for additional DAP also. The DAP rate is assumed 15%. So we will claim normal DAP in this case, that is 7.5% because asset has been used for less than 180 days. That means 7,500. The value is 1 lakh rupees. So normal debt will be 7,500. Additional debt will be also 10%, not 20% because less than 180 days used. So that will come to 10,000. So this is the depreciation, 17,500 we can claim. Addition to the asset is 1 lakh new asset purchase. Clear? That will be my closing WDV. But now the provision says, suppose in the next year, the concept says the additional debt of opening WDV will be 11 lakh minus 17,500. That means 10 lakh 82,500. Correct? So in the next year, we can claim the normal depreciation at full rate 15% and the balance additional debt which has been left over here, like 10,000 we claimed, but we need to claim 20%, but we claimed only 10%. So that 10,000 can be claimed over here. This is the concept. But now the provision says, suppose in next year, you apply section 115 BAC. So if you apply section 115 BAC, then you cannot claim the additional debt. This is the rule. But department gives you one advantage. So if in the year you apply section 115 BAC, and if there is any depreciation left need to be claimed, which is attributable due to additional depreciation, then this 10,000 cannot be claimed, but this 10,000 will be added to the WDV. So now your WDV will be 10,92,500. So department says if you are not able to claim the additional depreciation because you are falling under section 115 BAC, then the additional debt which has been left over will form part of your opening WDV. So that will be allowed you in the form of normal depreciation in subsequent year and the current year also. So this is the provision which has been made. So where there is a depreciation allowance in respect of a block of asset from an earlier assessment year attributable to additional depreciation, understood? Which had not been given full effect to prior to assessment year 21-22 and which is not allowed to be set off in the year assessment year 21-22 due to exercise of option section 115 BAC from that year. Corresponding adjustment, that means addition. Corresponding adjustment shall be made to the WDV of such block of asset as on 1/4/2022 in the prescribed manner. That is, the WDV as on 1/4/2020 will be increased by the unabsorbed additional depreciation not allowed to settle. This is the example. You can read it. Of course, it's the same example I've told you. I have told you with the help of the numerical value. This is the theoretical way example, what has been given in the study material. Okay, remember one thing. Might be some of you thinking, what is this difficult provision? 115 BAC, it's so difficult. AMT is so difficult. And normal tax was already so difficult concept. And this is happening like a mess. But let me tell you a very simple thing. Very simple. I always told you, whenever you go through any numerical topic theoretically, you feel it complicated. Whether it's PGBP, whether it's capital gain, whether it's deduction, whether it's salary, whether it's residential status, any provision, even the AMT, what we discussed. If you go through the theoretical provision, you will find it very difficult or complicated. But as the summary I have given to you in like 4 or 5 points, if you go through that, you will feel that it is easy. And when we will solve those 11 questions, which comprise the AMT provision also, which comprise the 115 BAC provision also, I promise you will feel that BAC and AMT is not that difficult. Because we are technically going through the numerical topic with the theoretical provision. So things feels like complicated because the language is difficult. But I promise you, when we will go through the question number 1 to 11, by the end of that 11 example, you will feel that 115 BAC or AMT or normal tax calculation, they are not difficult. The problem will be only one. That if you know the provision, you will able to solve it very easily. And 115 BAC and AMT is very, very simple. Like what we need to do in AMT, nothing. TI, total income, we need to add 10 AA deduction, 35 deduction, and 80 RRB, QQB, double J, double A. That's it. That will be your ATI. Multiply 18.5% tax, surcharge, and cess. That's it. That's the tax of AMT. How much time it will take to solve? If you are able to solve the total income as per normal provision correctly. If you're not able to solve the total income provision correctly, then it will be a problem. But if somebody is able to solve the total income provision correctly, then AMT calculation will not take more than 2 minutes. Not more than 2 minutes. I promise. And 15 BAC, it's a simplified tax structure. The problem is what deduction we cannot claim. You just need to remember those deductions. That's it. Otherwise, the slab rate is too simple. 2.5 lakh, 2.5 lakh, you have to do it up to 15 lakh. First 2.5 lakh is 0. All other have a 5 table. 5 ones are 5. 5, 10, 15, 20, 25. Balance is 30. So, because we are technically going through the numerical topic theoretically, so you might be feeling that it's a complicated provision, but let me tell you, students, no, it is not. You will feel it when I am going to solve all 11 questions one by one with you. So time limit for exercise of option. Now this is a theoretical provision for the numerical topic. It's a theoretical. It's a pure theoretical. 15 BAC is a time limit that if you have no business income, then you can apply section 15 BAC up to the due date of ROI under section 139(1). You have option to claim 15 BAC in 1 year. In the next year, you can change it. And another year, you can again change it. So assessee may choose to exercise the option in every year, whether he wants to pay tax as per 15 BAC or not. But if you have business income, in that case, you have to intimate before filing of the due date of ROI. You have to submit a form up to the income tax side that I want to claim under section 115 BAC provision before filing of ITR. And once you exercise the option, if you are having business income, if in the 1 year you exercise this option, then you cannot change it. You have to apply this section every year. So any previous year, and once such option is exercised, it would apply to subsequent assessment year also. The option can be withdrawn only once. Only once you have the choice to withdraw this option, where it was excised by the individual HUF having business or profession income for a previous year, other than the year in which was exercised. Thereafter, the individual HUF shall never be eligible to exercise option under this section, except where such individual HUF cease to have any business income. So if your business has shut down, automatically you will fall in the now first category. In that year, you can change your option from 115 BAC to normal, or in future also. So if you exercise the option of section 115 BAC, if you are carrying a business, then you have to apply it for future year also. Consequences for failure to satisfy any condition mentioned in section 115 BAC. So if you have no business income and you want to claim the deductions as mentioned, like LTC deduction you want to claim. You want to claim HRA deduction exemption. If you want to claim ATC deduction, in that year, this section will be invalid for you and you will be shifted to the normal provision of income tax. Same, if you have a business income, but you want to claim, you're a salaried employee also, and you are business also. You are doing business also, you are a salaried employee also, and you want to claim deduction of or exemption of HRA, etc. Then again, you will be left out this section and you have to pay tax as per normal provision of that year or the subsequent year also. AMT liability not attracted if you are applying section 115 BAC. In that case, that tax liability is your final tax liability. AMT is not going to calculate if somebody wants to pay tax as per section 115 BAC. It may be noted, theoretical provision, you should go through it, of course. The surcharge rate will be applicable, the cess will be applicable, there is no difference. The third point is important, that is regarding TDS. Again, it's a very simple provision. The whole paragraph has been actually framed to make you understand this concept. This is very simple. If you are doing job somewhere, you are an employee. So your employer deduct the TDS on your salary. You need to inform your employer. You need to inform your employer that are you going to take section 115 BAC or you are going to pay tax as per normal provision. Because he will deduct the TDS accordingly. If you will tell your employer that I am going to choose section 115 BAC, then he will calculate your TDS as per the slab rate which has been given in section 115 BAC without giving any exemption of HRA, deduction, etc., etc., etc. So he will calculate the TDS as per section 115 BAC tax liability. And if you say I am not going to opt section 115 BAC, then he will calculate your TDS as per normal provision of income tax and deduct the TDS accordingly. But if you are running a business, in that case also, your payer deduct the TDS. In case of salary employee, you can change your 115 BAC option every year. So your employer can also change the option of TDS deduction every year. But if you are doing any business and your TDS need to be deducted by the payer under section 194C, D, H, etc. In that case also, you need to intimate your payer that either you are going to pay tax as per section 115 BAC or not. Then he will deduct the TDS accordingly. Or if not, then he will deduct the TDS as per the normal provision. Suppose Mr. A is an employee as well as running a business. So he need to tell his employer that I am doing a business also. So in that case, if he say that I am going to pay tax as per section 115 BAC, then the employer will deduct the TDS as per section 115 BAC for every year. And if it is not a business, then you can change the option. Again, it's a very good provision for the salaried employee that if your TDS has been deducted as per section 115 BAC, at the time of filing of ITR, you can change the option into normal pay of tax. That TDS deducted will be allowed as a prepaid tax to you. These are the theoretical provision. For the purpose of tax deduction at source, CBDTS circulation provides that an employee having income other than, if you do not have any profit and gain income, only salary income other than PGBP, and intending to opt for concessional rate on section 115 BAC is required to intimate to the deductor, being his employer, of such intention for each previous year. And upon such intimation, the deductor shall compute his in total income according to the intimation given by him. It is also clarified that the intimation so made to the deductor shall be only for the purpose of TDS during the previous year and cannot be modified during that year. However, the intimation would not amount to excise option in terms of section 115 BC, and the person shall be required to do so along with the return to be furnished in section 139(1). The option at time of filing of return and under section 139 could be different. So either your employer deduct the TDS as per section 115 BAC, but at the time of filing ITR or paying tax, you can change the option. You have that power. Further, in case of a person who has income under the head PGBP, this change is not allowed. Also, the option for taxation section 115 BAC, once excised for a previous year at the time of filing of return of income under section 139 cannot be changed for subsequent previous year, except in certain circumstances. Clear? Whatever tax or TDS has been deducted as per 115 BAC or normal, that is going to be deducted from your tax liability. That is not an issue. You can read these provisions theoretically, tax payable, refundable, etc. So these are the test your knowledge provision, which needs to be discussed one by one. There's total 11 questions. And these are beautifully drafted. And let me tell you, if you are able to solve all these 11 questions with me, or even you are with me when I am solving it for you, and you are just going through with the provision I am telling you and all the concept, you are technically going to revise almost all the provision of income tax. As you can see, question was related with residential status, as well as income from other source, as well as income from house property also included in this. I'm just giving you a trailer. Then question number 2. It includes PGBP provision, as well as house property provision, as well as salary provision, as well as income from other source provision, as well as TDS provision, as well as deduction provisions, everything. So these questions will really going to help you to solve this kind of question in examination. So we will start these questions from our next session, which is day after tomorrow. But before that, I will take your queries, and a request from my side to all of you, please revise your topic as much as you can before day after tomorrow class. Because if you'll go through with the provision of salary, house property, PGBP, deduction, and it's a request to please revise at least PGBP, income from other source, deduction, and TDS. These 4 topics kindly revise, because most of the provisions which are going to discuss in these 11 questions related to these topics. And of course, MAT and 115 PS. After completing these 11 questions, I personally believe you will be really finding these provisions are very easy. So let me take the queries, then we will close our class for today. So if there's any query, you can ask me. Okay, I guess there is no more queries left. I'm waiting for your queries for 1 or 2 minutes. After that, I will close the class and we will resume after day after tomorrow. So kindly do revise the provisions, especially PGBP, income from other source, deductions, TDS. These 4 topics are utmost important for our next class. And please go through the provision of AMT and 115 BAC. If there's any confusion, any problem, do ask me. In the next session, I am going to help you in every way. And please study hard. Please revise your topics. It's very important. It's almost we are like 2.5 months away from your examination. So please, this is the last time you have to get up. You have to increase your study time. You have to start your revisions for those topics you already covered. If there's any topic which is still in process, you are completing. Like if any subject, you are on the end of this subject, then start revising the starting chapters of that subject, because revision is something which is very important. It makes your knowledge strong every time to revise any chapter. So without revision, it's impossible to cover up the study at the time of examination. Aisha Safa Sayas, salaried person with business cannot change 1C ops for section 115 BS. Yes, you cannot change it once you excite it until otherwise under certain circumstances. Like if a salary person decided, who's having business income also, has decided to claim the exemption of HRA from this year. Last year, he or she applied section 115 BAC, salaried and PGBP. So automatically in this year, he needs to continue with that. But in this year, he wants to claim the deduction of section 3580 or salary exemption or deduction of section 80C to 80U. Then he can take that deduction and he need to opt out of section 115 BAC. That is allowed only under certain circumstances. So these are the. Mohammed is asking, a person who ceased to do business, then he can opt section 115 BAC by changing each year. Yes. If you shut down your business, then you will automatically go into the first case, in which those who do not have any business income, and they can change their 115 BAC option every year. Anil asking, sir, could you please tell me your mail ID for any queries? No, Anil, that's not possible. That is not allowed us. Your board of studies are not allowed us for this. So we cannot personally interact with you. You can ask me your queries day after tomorrow, whatever you have regarding this topic, and I can solve it over there. Okay. So I guess that's enough for today. So Manishji, can we shut